Will slowing economic data in China impact the rest of the world? Welcome to Market Insight. I'm Ludovica Brignola. China has released a slew of worrying economic data over the weekend, with August factory output, retail sales and investment numbers all missing expectations. What does this mean for other developed economies? Well, to help answer all that and more, I'm joined by Chris Beauchamp. He is Chief Market Analyst at IG. Thank you very much for being with us today, Chris. Right, so over the weekend, new figures showed that China's industrial output growth slowed to a 5-month low in August. There was further weakening in both retail sales and new home prices. I mean, what kind of reaction are you expecting then from Chinese policymakers from the monetary and the fiscal side?
I think we are expecting action at some point from China. The weakening data has been a theme for quite a while now, really. The lack of really solid growth from China, or certainly the growth levels we've been used to in recent years, means that markets are worried about the direction of travel here, that things aren't getting better of themselves. And that does increase the onus on PBOC and on the Chinese government itself to do something. We have had these moves to help with mortgages, firstly.
Right. And what does this mean for the rest of the world, I wonder? I mean, can this be the reflection of a more global slowdown, or rather, do you expect spillover effects? Which exactly?
I think it is reflective of that broader global slowdown, certainly more pronounced in China than elsewhere, really. Commodity prices, of course, pricing quite a bit of deflation as well in China, and the CPI figures from there confirm that. And this is the worry. You've got the US beginning to slow, not as much, of course, but certainly moving in that direction. You've got a weak European economy, and then China as well. So the three key engines that we're hoping will drive growth, will drive earnings for companies, really aren't showing the kind of optimistic outlook that we'd be looking for at this point in time, particularly when you look at how well markets have performed of late. Where's the next real positive catalyst going to come from?
Right, you're right, and we'll get back to that in a minute. But this, in Europe, especially, despite the stagnating growth, at its recent meeting, the ECB did not commit to an easing plan. I mean, is this because the battle against inflation is not really concluded? And do you think that inflation could bounce back in the Eurozone?
I certainly think the ECB is hedging its bets certainly firmly on the side of doing less in order to wait for other data to really give us the conclusive proof that inflation is under control. I think the Fed's obviously reached that decision. We'll see this week. The BOE certainly has. The ECB seems to be the odd one out, really, at this point in time, which is particularly interesting given the weakness of the Eurozone economy, given the way I think markets would like to see at least a nod in that direction for the ECB. And they were very coy last week about that. I think that's a bit of a concern, although for the time being, as I say, markets seem to be taking it in their stride.
Right, and today's news that we've seen of Volkswagen potentially closing down plants in Germany, that would be the first time in the company's history, right? I mean, that's another sign that the manufacturing sector is really struggling in Germany and in broader Europe. What's your outlook for manufacturing in the Eurozone?
Well, I think we see it continue to be under pressure, really, for the time being. There's little sign of really solid demand coming through. We know how much is predicated on growth in Asia, particularly in China, and there's not enough of that at the moment. So everyone seems to be sort of, we'll swim together, we'll hang together, really. And this is the issue, that if Germany's stuttering, everything else in the Eurozone is stuttering. What is the European Commission, what are the European governments going to do to try and give the economy the shot in the arm that it needs?
And as we were saying, despite these concerns about the European economy, in Germany in particular, I mean, European stock markets are really trading close to all-time high now. How do you explain this, and what's the direction of travel for the rest of the year?
Yeah, it's been the curious thing, really, all the way through the year, of how, with the occasional wobble, European markets have held up very, very well. And it's in large part, I think, due to the valuation discount, the fact that European stocks still look cheap compared to US. It's a story that's been going around for a long time now, but it remains particularly acute now that the US is coming back into focus as an area where economic growth is slowing. European stocks, nonetheless, perhaps offer more upside in valuation terms, at least. But even there's a worry that if something doesn't come down the line to really change the narrative about the Eurozone economy, even that, I think, might not be enough to avoid certainly a lot more volatility for European markets in the months to come. At the moment, though, investors seem fairly content. I think a lot will discussion now hinges on whether the Fed's move on Wednesday, as we expect, will give the ECB the cover it needs to begin cutting rates as well.
Right, and we'll see what happens on that front later in the week. Chris Beauchamp from IG, thank you very much for being with us today. And that's your Market Insight. Don't forget you can watch more videos on Reuters.com.